Good day, fellow traders. Let's review the major events that impacted global markets last week. On Monday, the British pound started its decline after results of the Sunday survey. More than half of the respondents in Scotland, 51%, indicated their support for independence. As a result, the British pound fell against the US dollar to a 9-month minimum at the level of 161.46. On Tuesday, the US dollar was rising on expectations of the Federal Reserve's imminent raising of interest rates. The yields on 10-year Treasury bonds rose after BlackRock published positive data on inflation and labor market. At the same time, the Japanese Consumer Confidence Index came out less than expected. Besides that, the geopolitical risks diminished considerably compared with those in August, and the later development didn't help Japanese yen. On Wednesday, the US dollar continued rising against yen to a new 6-year maximum at 106.654 yen per $1. This was happening on the backdrop of expectations of changing initial jobless claims in US. The next day, positive labor market reports were released. The unemployment rate fell to 6.1% against the forecast at 6.3%. As a result, the Australian dollar rose considerably from the previous minimum level at 0.9111. The Reserve Bank of New Zealand left the discount rate at 3.5% as expected. The chairman of the bank announced that he will adopt a wait-and-see stance until a decision on the exchange rate policy is made. The expected low inflation will form the foundation for discount rate stabilization period. On Friday, the US dollar strengthened against the commodity currencies as the prices for the precious metals, oil and copper were falling. Elevating the terror alert level by the government of Australia can be considered as another factor affecting the currency rate of the Australian dollar-US dollar currency pair. This limited the investors' readiness to take on risks, which was reflected in declining Australian market index Australian 200. The US dollar closed higher on the day chart against the Canadian dollar. The price breached the resistance level at 1.10. Most likely, this performance can be explained by low new home price statistics in Canada, which came lower than expected. The initial jobless claims in US turned out higher than forecast, but this piece of negative economic news didn't provide enough momentum to overcome the bullish mood. The price reached a new maximum, and we expect the rising trend will continue. This was all for the past week. See you the next week.